Join us now, Ali Dibadj, Janus Henderson Investors Chief Investment Officer, and just beautiful orange stuff everywhere. And nothing to do with Bitcoin, but the little "and" is Janus Henderson aligned with its clients.
It is indeed, yeah.
Okay.
Yeah, we pride ourselves with working with our clients and delivering for their missions.
And I'm excited to talk to you about something we don't always talk about, and that is fixed income. You want to talk about fixed income, or are you dying to talk about equities? Because
as long as we talk about the orange, I'm good.
As long as we're
check the box.
About you loving Bitcoin.
That's right.
You said, no, don't bring that up. No, that's not why. If you were Michael Saylor and you wore orange, we'd know why.
That's right.
So things are cheap. You say the securitized sector of the market continues to trade cheaply, and you do expect duration to be extended because we're at the beginning of a cycle of easing.
Yes.
So people are going to buy this stuff. That might be the place to go then.
Yeah, look, I think when you're at this probably peak of the cycle where we're at right now, we'll see over the next couple of days, but that's probably what's going to happen.
Right.
People will do two things, right? The first one is they will certainly look for longer duration elements. Things like mortgage-backed securities.
That's the longest. You have them ranked as the longest, highest to lowest duration. Mortgage-backed, ETF, mortgage-backed ETF, asset-backed securities, JABs. What are JABs?
JABs is a broader pool. It's a great ETF, actually. It's a broader pool of securitized.
Okay. Cool.
It's not quite as long duration as mortgage-backed securities, JMBS, but JABs has the opportunity to go more broad and even slightly lower in terms of the rating, so you get a higher return as well. We have JSI, which is more of a securitized income view. And then for folks who want not just U.S. exposure, but global exposure, we have something called Vanilla, VNLA, which is an ETF there too. But they look at, sorry, Becky? Vanilla. They look at, clients are going to look at duration extension a little bit, but they also, given the economy slowing down, are going to be looking at higher quality too. And where you can get higher quality and good spread, to your point, Joe, is in the securitized area. So JAAA is a great example of that. That's one of our flagship ETFs. It's crossing $25 billion now. It gives you AAA CLO exposure, which is very, very safe, and really good spread, particularly when rates come down.
CLO collateralized
loan obligations.
Yeah.
Is it really AAA? Because you think back to like 2008, we're just on the anniversary yesterday of the collapse of Lehman Brothers, and we thought all that stuff was AAA too. How do you check
that? That's because of the
mortgage-backed security.
The insurance. That was from the insurance. It wasn't backed up by AIG.
That's exactly right. So CLOs actually, Becky, it's a great point. CLOs actually, throughout all that time frame, did not default. They're actually safer than corporates if you pick the right rating, and it's actually appropriately rated. I think since then, the ratings have become much better. Okay. So AAA, I'd argue, is quite AAA. Now, I think there's another area where you can get even safer in a lot of areas, and that's on the private side, where you have an asset backing it. So people talk about private credit everywhere. Direct lending is more of a cash flow lending. We do much less of that, but we like it when there's an asset behind it.
Mortgages are almost an asset behind it, wouldn't you?
They are, for sure. But then you have to just make sure that the mortgage is actually going to be paid out.
Okay. So what kind of yield can I get?
You're talking mid-single to high single-digit yields across that.
High single digit?
Yeah, absolutely. You have to
like what? Like, say the number.
Like 8?
You can get 7s for more like BBB, still investment grade, but BBB type levels. Is that a place I'd go today? Maybe less so, but certainly on JABs, certainly on Vanilla, right? Certainly on JSI, and for sure on JAAA, including the asset back, where you can actually take the asset. And it's an asset pretty well. We have a company called Victory Park Capital that does a lot of that. I think there are areas like that where you can certainly go, even in a Fed rate coming down, because the spread becomes more important, right? If the underlying yield drops, that spread becomes more important.
Because if you think the market is just too high at this point, I'm not saying you do, but if you're a person who does and you're at a certain age or whatever, 7% is not that different than if the market were to cool off a little in the next 5 years, 7%, a lot of people would sign on for that.
I think that's right. Now, to be fair, you're taking a little bit more risk. If you're comfortable being in the 5s and 6s, right? Yeah. Then you can get really high quality.
At least for part of the
for part of your portfolio.
But what about equities?
Look, we think there's tons of opportunity out there, right? There's clearly a group of companies that have been pushed up to arguably the stratosphere in a lot of areas, but we see enormous opportunity. You saw what happened with Oracle, for example, last week. We were big holders of that. You continue to see that there's opportunities in the marketplace. And
do you buy more of that, or did you just sit because you already owned it and think, fantastic, this is great news?
Well, we certainly thought fantastic. I'll leave the PMs. I'm not a stock picker anymore. I'll leave the PMs going to decide their asset allocation because it was up 40-ish%.
In a week.
In a week, right? For a very large cap name. Larry was very happy about that, obviously. But look, I do think the equity markets, you're seeing several kind of themes play out here. And our clients are asking about these things. One is, how do we navigate all these geopolitical changes that are going on? So they ask for that, and what they're really looking for are things that are very innovative, that kind of break through that geopolitical tension that's out there. So we look at healthcare very, very strongly. We're very strong in terms of some of the technology areas, but particularly the kind of picks and shovels, as opposed to just the high-flying stocks that are out there. Folks are looking definitely at demographics and kind of lifestyle changes, AI things. Again, there we think healthcare is quite attractive, technology is quite attractive, but we also believe that the broad base of small and mid-cap stocks are way undervalued. Now, you have to pick and choose where you want to go, given the environment we're into. I mean, the economy is clearly slowing down, but small and mid-cap stocks we think have enormous potential to actually deliver the next little while.